Welcome to Agoracom, Small Cap TV, best of the best. It's been a while since we've been with you. Sorry about that, but I was away for the entire month of January on business, going coast to coast. So our apologies for not having a show for you sooner. And when I mean us, I mean myself and Alan Barry Labucan, our chief market commentator. Alan, say hello.
Hello, everybody. Yeah, it's been a little while since we were on, but we've got a wrap-up of our big contest that we started, our tax loss selling contest, and we've got a few other topics to talk about, so we'll have a great show today.
All right, no better pick-me-up to me feeling a bit under the weather than knowing that last year, Alan beat me 47% to 33%, a good whooping last year. This year, a tougher market environment. But Alan, why don't you give us a drum roll, please, so I can bring up the results?
Yeah. So we started this contest in
December 16th.
On December 16th, and it's our tax loss selling contest. The idea is that we pick a bunch of companies, 6 companies each, between George and I, and we look to try to. We look for things that have been sort of beaten down. George, I'm having a hard time finding my my drum roll. Anyways, yeah, we look for things that are beaten down, and we try to make good picks that'll perform well in a 6-week period. So that's.
And here's what we got, Alan. You can see the results up in front of you.
I can.
All right. So Alan, right here, you can see his picks. Very admirable, Alan. Very admirable in one of the toughest markets environments. Up, down, oil crashing, gold everywhere. 4.77% return in the equivalent of 45 days. You annualize that times 9, and you got a pretty great annual. Annual number there. Unfortunately, I came out just.
I like your little modest. What do they call that? A humble brag there, but. Go on with your saga.
Backhanded compliment. And I squeaked it out here with a 5.99% return over that same period of time. So I think we both actually did pretty well, all the things considered, given how bad this market's been. Not bad, how challenging it's been with commodities and currencies trading like penny stocks, for lack of a better term. I mean, look what happened to Swiss franc.
That's a very accurate way to say it. And when that happens, you got to know that volatility is coming, folks. I've been saying for quite some time now that I see that the markets are pretty richly valued. I think it's going to pay to be a real contrarian over the next year or two. And so you got to look for things when they're beaten down or out of favor or under love to really find the winners. That's what I'm sort of seeing with the way things performed so far in the last 6 weeks, George. And oftentimes what's happened in the last 6 weeks is sort of indicative of the rest of the year.
Well, let's go over your picks. So you made six pretty good picks. In fact, the one that didn't perform all that great was the one I believe I thought was going to be your killer. But why don't we go through them here? Rubicon Minerals. Right after we started the contest, you actually came out on one of our shows and said, "This is for the first time ever you're a number one pick." And what Alan meant by that was, in all of the years, he's always had a variety of picks, of great picks when people ask them. But Rubicon, you said, is your number one pick, period. And it performed very well for you as your biggest gainer, gave you 52%. Sits at $1.52 now. I'm going to bring up this little chart on the side here to show everybody. But where does it go from here?
Yeah, George, I actually picked this as a short-term and a long-term. When I say it's my number one pick, what I've always tried to do is be pretty balanced in the way I look at companies, and they either make the grade or they don't make the grade, and the grade is to always try to be, your A picks, your number one picks, right? Obviously, when you're picking a lot of companies, they can't all be number ones, but I sort of try to make them all, fit into the category. But I am so confident with Rubicon, especially when it was back at $1.05 when we started the contest, or $1 when we started the contest. My argument is that they'll be the first company since Goldcorp to bring a new gold mine into production in Red Lake, Ontario.
When do you think that'll happen? When do you think next
later
12 months,
in this mid-summer.
Wow. Okay. So everyone keep an eye on that.
And so I'm a long-term bull, and it's still my number one. If someone stopped me on the street and asked me what's my number one gold pick right now, it's still Rubicon.
Is that priced in right now? Is that $1.52 pricing in production starting in the summer, or is that still, or is that undervalued because of nervousness over gold, nervousness about financing these smaller cap companies and their production goals?
Yeah, well, I think that's obviously got a lot to do with it, George. But if you also look at it from just a pure technical perspective, look at those last two, that double bottom. We've had a nice, strong move off of that second double bottom.
Yep.
The second part of that double bottom was a little bit higher than the previous low, and now it's sort of creating a handle. I think from a technical perspective, you can also get very bullish on this company here. Now, does that mean that you might get it for a slight bit cheaper? I really don't think at this time it's worth getting too cute with a company like that.
No, your next up was Nevada Sunrise, NEV on the Venture Exchange. Fundamental side, the one tongue-in-cheek criticism I had is the lack of volume in the company. But otherwise, where do you see Nevada Sunrise in the next 12 months?
Yeah, even though there's a lack of liquidity on the stock, they really trade at a percentage of Pilot Gold because the two of them are involved in a really great project down in Nevada. It's one of the better discoveries that I've seen in the last few years. And by the way, one of the last companies to make one of those important discoveries was a company called Frontier Gold. And all the people that sold out Frontier Gold have now they run Pilot Gold. So it's got good pedigree. They know Nevada real well. They got an excellent new discovery. It's one of the more exciting new discoveries. I'll stick with NEV. I like them a lot. I like PLG as well, their partner.
Pacific Rubialis. That was a screaming winner for you right off the bat when you made the pick in the contest. It was at 558 and had a great short-term move. But then none of us saw the collapse in oil that's taken place since then. So I guess what really is important here is, do you think that oil is bottomed out? And I think you and I had a show where we talked about the fact that I made a call. I said 47.50 seems to be the low. It did overshoot. We did get to the 45s for oil, but
actually, George, I'm certain for some reason I remember that you had a follow-on to that you thought if it broke through that, you had another number that was lower. I just
48.50 was a number that I said. If it breaks at 48.50, I get bullish on oil. And in fact, as we're talking right now, oil is over $50 for the first time in what seems like a very, very long time.
Yeah, and for me, I've been bullish on oil stocks really significantly since it got under $50 a barrel. My basic argument has been that the average cost of producing oil is around $80 a barrel worldwide. So it can't stay down below 50 for very long. That's why in the contest I had 4 of my 6 picks were oil picks. And you're right about Pacific Rubialis. Actually, Pacific Rubialis was my, I think that was my Achilles heel. Had I have taken the profits when it was up around 780 or something like that shortly after the contest, I'd have probably squeaked you out. But nonetheless, I picked the company because, one, I thought that oil was very oversold. And the oil stocks at that time were even worse. This was a company that could be a potential takeover target. And I'm keeping it in my picks. I doubled down. We're going to talk about my overall picks of the portfolio.
The economics change for Pacific Rubialis though in this $48.50 to $50 range, where even though the stock is cheap, maybe suddenly its business has become economical.
Well, no, what happened was, George, the reason that the stock ended up after it hit a high of 780 or so, there was debt worries with oil below $50 a barrel. But those debt worries are kind of out a little bit of a ways. So I think that as the $50 number comes back or better, that they won't be as worried about that longer-term debt issues with Pacific Rubialis. And I still think that Pacific Rubialis is a takeover target, potential takeover target.
And what's amazing, if you can see the right side of my screen, I've got the small version of their chart up, that their 100-day moving average is at $12.19.
Wow.
So you're talking about pretty much,
well, that just tells you
triple from here just to get to its 100-day moving average that gives you a real understanding.
And at where it was at the 100-day, when it was up closer to it, that was when oil was 90 or better. So if you think that it's going to 90 or better, you know, that's a pretty good risk-reward scenario for Pacific Rubiales.
Next up is Bankers Petroleum, BNK. You bought at $2.79. You closed at $3 in the contest. You keeping that in the portfolio?
Yes, this is another one that I picked as a potential takeover target in the space. Long-term, well-known name, just hammered down. It's at $90 or better. This is a very profitable company. At 80 to 50 or worse, practically no company is viable in the business except for the Saudis. So, either the business is going to implode or it's going to get better.
And if you look at the chart on the right-hand side, Bankers Petroleum, given the volatility in oil, has actually acted pretty reasonably here. Take a look at, it started 2015 at $3.30, and today closed at $3. So all the things considered, pretty good performance there.
You bet.
Penn West, are you keeping Penn West? You're moving out, right? You don't want to keep that going forward. You cut your losses here.
Yeah, and the next two picks, actually, one is already in there. One I'm going to add to it. Sorry, my dogs decided to start acting up behind me, start ripping up paper. Sorry, George. Yeah, the Penn West I'm going to get rid of. I'm going double downing with this portfolio. I think it's going to perform very well in the next 6 weeks or so. And so but I want to tweak one thing. I want to get rid of Penn West. I think they're going to be fine. I just want something that has the potential for better performance, and that company is TOG, Torque Oil and Gas. Why I like that company, George, when oil got below 45, I really started doing some homework, and I found two companies with exceptional balance sheets in the oil space that really excite me. One is this TOG. The company, well, practically every other oil and gas company has had to cut their dividends. This company has not had to do that. They have a really strong balance sheet, and I think that that's indicative of a well-run company, and it doesn't matter what sector you're in. When they run on tough times, it has a way of the cream rising to the top, and when things get better, that cream tends to perform exceptionally well, and that's why I want to add TOG to my picks. The second one is the next one.
Take a look at that stock chart, by the way, in 2015. It's actually done very, very well. Look at this here.
It's a balance sheet, George. It's a good one.
All right, well, that's obviously, look how it's performed. I mean, it closed January 2nd. Let's see where it closed a year. Wednesday, December 31st, it closed at 770, and today it's at 890. So you're talking about $1.20 up over 7. So you're talking about some pretty good numbers there on a percentage basis, given what's happened in the oil space. So definitely one to watch for.
So I said there was two companies that had really good balance sheets. The next one is one that I also picked in our contest, which is Chinook Energy, CKE.
Yep.
And that company, for a little oil and gas company, George, they got $75 million in the treasury. What they've done is they've announced that they're going to cut back on some of their exploration while oil is down here, which makes a lot of sense. Another company that their balance sheet's indicative of a well-run company, and I like the potential performance of that going forward. So I really want to revisit this new old portfolio, my new and updated portfolio from the tax loss selling contest in about 6 weeks.
Well, look, and again, look at that again. The company closed at about $1.27 on December 31st, and today it's $1.28. No big deal on the penny, but just the fact that through all this volatility, it's been able to outperform all of its peers relatively well. It's got to be the top 5% now.
This is a little undiscovered gem, George, and I think it's going to do well.
By the way, while we're here, and you can see the bottom of the screen, you can see this here, Alan?
Oh, yeah, Georgie.
So before we go into my winning portfolio, got to give Alan, we had a second side bet that was from way back in, we're talking potentially around
September.
August the 10th or something like that.
Something like that, yeah.
somewhere in there where I made a prediction that Twitter was going to be a $75 stock by the Super Bowl.
And I said, nah, I'd rather just have BlackBerry.
Yeah, let's see. I did get it as high as, if you're looking right here. So look at this. Look at this performance right here in the middle of the summer, right? And then look at that. I was looking beautiful right into the end of September. In fact, I was ahead of schedule, $52 after a month.
Yeah, but not 75.
And then all of a sudden, kablam here. So I'm down 14.98% because I made the pick at 44.06, and that's down 15%. You, on the other hand, said BlackBerry is the company to invest in by far, and much better than. And so we made a bet there as well. We put up a challenge there as well, and you're up 5% on that pick. A lot more stability when you look at the share price here.
George, don't forget something. We're Canadian, right?
Yeah.
Look at that performance. That's U.S. dollar terms.
Yeah, that's true. Actually, if you factor in the U.S., if you had bought BlackBerry and do it in U.S. dollars, you'd be up 5% on the stock, and you'd probably be up another 20% on the currency.
Yeah.
Yeah. So you're 100% right about that.
And if you're never
you'd be at a 25% gain, and I'd be at a 5% gain because I got a 15% loss of stock, but a 5% gain on the equity. So.
And that's the same story for practically every other person in our audience who is not in America, because every other currency has been blasted by about the same much. So it's a really good situation for our non-U.S. Viewers.
All right. As far as my portfolio, I'm not going to go into it in any deep detail. This Russian bull ETF. If I had to look out, forget about over 6 weeks. I don't have a vision over 6 weeks. If I had to look out over a year, I'd say this gets better only because sooner or later Russia is going to have to get out of this Ukrainian penalty game. There's only so long they can sustain this for, but in the short term, anything's possible.
But it's creating a really nice base there, George.
It is. It absolutely is. It could base out like this for 6 months, so I don't have a 6 week outlook on it per se. But it did give me 3.84%.
So, if I had to ask you, if you thought that situation with Russia would last for longer, then, do you think that there's a chance that this could be a short-term play that surprises people, or do you think that that's going to take a lot longer to? Obviously, in 6 weeks ago, you thought that there was a chance that it could come to pass within that 6 weeks.
Yeah, I thought that this could be a 100% gainer, actually. And it didn't get there. It did have some decent short-term gains.
But your argument was based on you thought that situation could cool down over there, and it hasn't yet. What do you say?
And I think the Russian people, sooner or later, as strong as Putin is going to put a lot of pressure, and they're going to want an end to this catastrophe over there. You got sanctions plus oil. Russia's being hit hard. Debts their sovereign debt's getting downgraded.
Yeah.
There's only so long Putin wants to play this game. I don't care how strong he is. So if I had to bet, I would pick a substantial downside to this. $12 downside. So I'd be willing to take a 25% haircut. But I think you can make a substantial gain in 2000. I just don't know when in 2000.
That's what I'm getting at, George. Is I actually think that your argument from 6 weeks ago really isn't much different to me today. It was based on sort of cooling things down in Russia a little bit there, and that could have happened in the past 6 weeks, and I actually think there's a potential for it to happen in the next 6 weeks, but that ETF has been hammered so viciously that even the breadth of a better relationship there is likely to see that stock perform.
Well, take a look. I mean, back in September, back in late August, it's trading at $100.
Right.
So you're talking about 85% dip, and you know my rule. I think I've said this on the show a couple of times. Anytime an asset is down 85% or more, short of a complete catastrophe about it, you almost have to pick it up because how much cheaper can it get at the end of the day?
That's sort of what I'm coming at with you on this argument, or the counter questions I'm asking you, George.
Natural gas was that was my one hit. So going back to my performance, 5 out of the 6 stocks performed pretty well, but this one was a killer for me.
Yeah, the natty gas.
That alone cost me 10% performance in the portfolio alone.
Well, you didn't get your cold spell you were looking for, or actually you did a bit, but it seemed to be down the East Coast only. It wasn't one of those nationwide cold spells.
Yep, yep. Didn't get it, and you have oil dropping at the same time, which means that it's going to take natural gas down with it, no matter what. A market's the market, right? And people are going to
So what does
substitute.
that chart look like, George? Why don't you pull that one up into your little screen?
Yeah, I was actually looking at it. I was actually looking at it earlier. I'll bring up an advanced chart here, and can you see the advanced chart?
Yeah, on the right-hand side there.
No, actually, I got a new chart up, so let me bring this up for you. Let me bring up the bigger one.
By the way, what screen is that you're coming off of there, George? I've never asked you that.
What do you mean, what screen?
It's for your how does if someone wanted to have that same screen as you have there.
Oh, this one right here that you're seeing here?
No, no, the whole. Who are you, what service are you using,
Oh,
George?
CodeStream Pro. Yeah, it's a good service.
You're answering questions like a lawyer now. This
No,
is the gal you're talking to.
So take a look at. I gotta admit, this is if you want a pop in an ETF. You guys looks like it's it for a couple of reasons. First of all, take a look at the Bollinger Bands here.
Actually, this one
it's down at the very bottom of its band. Go ahead, Alan.
This one scares me a lot more than your Russell. This one looks like it's going into a downward channel that started about 6-8 weeks ago.
Yeah. Well, if I would wait for a 250, 255 somewhere in there handle, and if I can get that, I would take that. I wouldn't take it just yet. But everything else, look at the stochastics. Okay, the percentage D is under 10. The
This
RSI
is your nephew's pick too, eh? Your nephew likes this one too.
Yeah, he's liked it. He got ahead of it a little more than I did, and I think he's made some money by getting in and out. I just didn't like the chart for the longest time. I did a quick pop, actually, made about $800-900. But overall, I have been happy with this chart. But right now, it just seems like if it gets down to 250, I'd be a buyer, but I wouldn't be a buyer before that. I wanted to get down there. So
George, it looks like since October or something there, it's been on a lower lows and lower high kind of trend. Those usually are more than 6 weeks.
All right, and then the rest of them, Timmins Gold, performed pretty well. 31% or so. If you're bullish gold, I'm in between. So here, as far as gold goes, right now for the next 3-4 weeks, I think it's a bit of a technical no man's land. I don't see a reason for it to race over 1320. I don't see a reason for it to get below 1245. The 12. So I think we're going to be in a bit of a no man's land until the market tries to figure out this race to the bottom, and I think it should be scaring the hell out of people. This currency race to the bottom, interest rate to the bottom. Canada cut by.
Well, George, actually, I'm of a much more bullish argument when it comes to gold. You and I have been butting heads on gold since the summer when I was really bullish and looking like an idiot. I'm starting to look a little bit better these days, but I actually think you have to pay attention to the fact that the U.S. dollar has been going up against every currency in the world, and gold has been going up against the U.S. dollar. I think that tells you that the best performing currency, I don't really look at it as a currency, but if that's the mind you're of, that's the best performing currency there is right now. I think that, to me, that shows a lot of relative strength, and I think we're in a buy the dips market for gold.
I could agree with that. Actually. Buy the dip for me. I definitely am more bullish than bearish. Right here I wouldn't make any kind of trade at this 1275 level. But if it does,
now you're breaking your own rules a little bit there, Sunshine.
No, not really.
All it had to do was get over $1,240, I believe, in the summertime, and you would be bullish.
Yep, and it made its run. That's why I picked Timmins Gold. Because I thought gold would do pretty well, and it has done pretty well. But I think it's going to do. I think it's going to do 2 steps forward, 1 step back. So now I'm waiting for the 1 step back.
Okay.
1245. But then I agree with you. I would buy the dips on gold, no doubt about it.
Good.
And then the rest of them, Tamarack Valley.
Hey, that one was your best performer, and guess which one? That was my pick out of your picks.
Yep, you did say that would be the home run, and it did do 32.98%, and that beat out Timmins Gold. So you were right about that. Zenyatta Ventures, $1.51. You remember during the show I said it was going to do $1.60 when we picked up at $1.21, and in fact it did $1.60 by the first week of January. So that
You know what
performed
I'm
really,
seeing
really
in
well.
Toyota these days, George, is that there was a lot of hot money in that stock for a while. And you know me, I'm more friendly with cold money. I like to know what the cold money guys are doing a lot more than the hot money guys. And I think as a company, you want to think the same way. And so I'm kind of bullish on the idea that Zenyatta has finally got a lot of that hot money out of their stock, and now they can sort of perform on their fundamentals. And from what I've seen of the fundamentals, they've got a very compelling story. And so I like to look at them when hot money has left the building and they've got a compelling story.
Well, you've got a real high, you got a really you got a real convergence of the moving averages here between the 950 and the 100-day. They're all crammed in between $1.54 and $1.77. So I think the market's just waiting for that PEA to come out, and when that comes out, that's gonna be a big determinant of which way on the balance of probabilities. I think Zenyatta's going to do very, very well, but I would just sit and wait now for the PEA, and I wouldn't be a seller and I wouldn't be a buyer. It performed great for me, so I'm happy with that.
George,
And or beat finally.
Do you by any chance have a chart of the index, the venture and the TSX, which is sort of my litmus of?
Yep.
I'm just curious as to how I did.
Let's bring it up right here. So here's the TSX venture exchange.
I think these days the TSX is maybe a little more indicative of what my portfolio metrics might be based on. But sure, give it. Let's see what the venture did.
All right, so let's look at the TSX. Let's look at the TSX first, okay?
Sure.
So the TSX over the last 3 months. Let's go back to December the 16th.
Yeah.
Right. So on December the 16th, the exchange it closed at 13,670, and today it's at 14,900. So it's actually done pretty well, all things considering what's happened. But I think that's because it was way oversold going into December.
Yeah.
And then the TSX exchange.
So I
bring that up here in 1 second.
I underperformed the TSX, which is a little disappointing.
The TSX Venture Exchange on the 16th closed at 642, and today closed at 685. So you talk about 37 points over 640.
Yeah, about 5.
Some quick math. 30.
I'm just breaking even on the indexes. I'm a little upset these days, but what can you do?
5 point. Well, I got to tell you though. I got to tell you, and I'd beat you up if I could, right? Because I didn't do that much better. I just barely beat it, but I beat it by 23 basis points. It was an incredibly hard environment to get that done, and the amount of volatility again. The Swiss franc climbing 20% in 1 day, the dollar index climbing 15% in the last month, oil dropping.
George, you said it right. I really think that you've said something that I think is really important to stress. George has said more than once now that currencies and indexes, things that are fairly supposed to not be that volatile, have been trading as if they are old VSC stock promotion plays. And when that kind of thing happens, you have to know that volatility is coming. Things don't go up in one direction. You look at the US dollar, it's one of the most overvalued things I've seen in a long time, George. It's been going virtually straight up for 3 or 4 months now.
Well, here's my worry. We've got volatility right now. My concern is that are we going to get earthquakes? Because right now we've got the volatility. That's here. But is all this volatility foreshadowing something a lot worse coming in the next 3 to 6 months? I'm looking for.
This volatility is nothing compared to the volatility I'm talking about.
Yeah, I'm talking about. So I've got a parachute by my side. That's how I'm treating these markets right now. Everyone knows I've hated this rally, but I've traded it, and my trades are online. Everyone can see them, and I've done okay with them. But I've got a parachute sitting beside me because these seem to me like tremors before something more serious. And I know it's unscientific, but March is coming, and it seems like all bad things happen. A lot of bad things happen in March. The dot-com bubble burst in March, March 7th. The indexes in 2009 all cratered on March the 10th, and we're a month and a half away from that. So
okay, so
it's crazy, but
let's put it into the context of what we've seen during this contest that we've just had, George. I mean, I think that oftentimes what happens at the end of one year and the first month of another year is very indicative of what's going to happen in the rest of the year. So let's say that we're going to continue to have this kind of volatility. I have a couple strategies that I think will outperform the index. Now that might mean that you just don't lose, as opposed to how much you're up. But I've got a couple. What are you thinking about that analysis or thought line?
I don't see anything that makes me want to hold. I don't see anything that makes me want to hold on to something unless it's paying a safe dividend. Because here's a theme I think that's going to continue, and I've been making this call for a couple of years now, and I've been 100% right. Here's the underlying theme. The 10-year today hit at 165, and I've been banging the table. I think you did too. We're banging the table for 3% that can't stay there. It's impossible. So unless something is paying you a dividend and a safe dividend, which means a local hydro company, a utility company, a local cable company, those guys are going to. Other than that, there is an asset class that I'm comfortable with over the next 12 months. Not given the inputs we have right now.
So
I'm not comfortable with anything right now. I'm trading in and out, and I'm starting to look at going short on some extremes. So I'm looking to sell. I'm actually looking to sell rallies right now and short some bigger names.
So you think a good strategy is to be biased towards a correction?
Yes. Yeah. If I had to, for sure. Until something changes, and I'll let everyone know. Right now, I'm seeing tremors that shouldn't be happening. I'm going to say it again because I don't know if everyone realizes it. The Swiss franc moved 20% in a day. The Swiss franc.
The Canadian dollars moved 2-3 cents in days.
Yeah, I mean it's unbelievable. What the Bank of Canada dropped rates by a quarter point out of nowhere. I think everything's going to hit the fan when the U.S. when the Federal Reserve backs off its raising rates in 2015, and they're still towing that line, but I just don't see how it's possible anymore. Europe is nowhere to be found. Canada, its largest trading partner, is weak. So where is the growth going to come from that warrants inflation, that warrants an increase in interest rates? So once that happens, the U.S. dollar crashes, and a lot of people start getting really, really worried about where to hide, and that may play into your gold theory, into your gold model there. That people say, okay, time for me to get into gold because it's not very expensive, and I think I just talked myself into being a lot more bullish on gold. But that's I think what plays out. That's what plays out. But it's incumbent. It's all incumbent on the U.S.
Georgie, you know what? You just made everybody in my lifetime who ever said when I was a kid, the way you talk, you should be a lawyer. You should be a lawyer. I just questioned you right into my position.
Yeah. So I think that's the only thing that makes me comfortable. Anything else doesn't make. I'm selling rallies and looking to buy puts in overpriced companies with high valuations. And dip my toe into there, and until I get a green light, that's it. I'm playing for a correction. How big, we don't know, but I'm playing for a correction.
We're on the same page here, and I think, George, that as a trader, you're probably going to get a couple significant ones between here and the end of the year, and really benefit from that trade. I don't think you need to get bullish on the overall market. I'm with you on the big cap stocks, but I would add in there that I think that because gold has been such a strong performer, and then if the U.S. dollar gets under some pressure, and I can't see how it doesn't get under pressure sometimes during this year, then as it gets under pressure, the price of gold is going to go up. And because the gold stocks are so fundamentally beaten down, it's like buying an option on the price of gold moving up. And I think that you're also getting that environment in the price of oil. oil right now is so beaten down. Now, even if the globe was to slow down economically, we're still going to be using more oil than we were last year. So my argument, regardless of what all turmoil happens, the reality is that it costs $80 a barrel throughout the world to produce oil. There's only two things that can happen from here. Either the price of oil goes up, or all kinds of oil production stops. And once that stops, it's not very long before the price of oil goes up again.
So finish on this note. If you had to bet on one, oil or gold in the next 6 months?
You put me in a tough position there because I mean, I think they're both very beaten down. But if you're going to ask me which one I think could outperform, it's a close horse race, but I'd probably have to go with beaten down oil stocks.
Yeah, same with me. Same with me. Only because at the end of the day, there is a real demand for oil that creates a faster dynamic than gold. But they're both a photo finish. But if I had to, I'd bet oil first. All right,
yeah,
man. So
if I was going to make one more tweak on my portfolio of 6 picks, it would probably be to add one more gold. But I'm a little more balanced on the oil side, and I think I'm comfortable with that,
right.
George.
So, buddy, we'll leave it there. There's been a great conversation, made up for a lot of lost time, where we didn't get a chance to talk earlier in January, and I hope everyone got a lot of great information. I know I talked myself into being a gold bull, but I think oil is going to prevail. Thanks for joining us, Alan.
Hey, thanks, George. Like I said, you made all of my relatives and my grade 7 school teacher, who sadly passed away. He was also my boxing coach and my basketball coach, and he saw those kind of skills when I was real young. And so thanks. You're saying thanks to him as well, Georgie.
Have a good one, my man. I'm going to sneeze, so you better shut off that video.
Okay, it's all done. Have a great one, folks. We'll see you soon.